Hey everybody, this is Alex Merced from alexmerced.com. I wanted to dismiss a myth that I hear even among a lot of my friends here on Wall Street, because I work on Wall Street, that shareholder buybacks have no value. A lot of people will sit there and say sometimes just assume that finance is a zero-sum game, or that certain transactions are zero-sum. Like, for example, the derivatives market. People are like, oh, well, the derivatives markets, well, one person wins, one person loses. There's a value in that, in the sense that it allows people to offset risk. But that's a different topic for a different video. What I want to talk about today is shareholder buybacks. Now, what is a shareholder buyback? Shareholder buyback is when a company has a lot of extra profits, has all this money laying around. Now, every year when a company, if it has profits, has a couple decisions it makes. It can either retain those profits because they think they can reinvest it back into the company to make the company more profitable, which means more wealth for its investors, which is in turn means that the company is producing more valuable to more people in some other business line through some sort of investment. 2, they can pay it out to their investors as a dividend. Okay? And the third option is they can do shareholder buybacks, which at the same time provide value. Now, ever since a couple years ago, there was this thing called the fiscal cliff, where certain tax rates kind of went up a little bit. But the idea is, with the increase in taxes, that also meant an increase in taxes on dividends. So to pay out the profits every year as a dividend, shareholders were getting taxed more on those dividends. So the question is, how can I still give my shareholders that money without allowing them to keep more of it? Because bottom line is, there's not enough to necessarily give them the same return they were giving before those tax increases. And again, if you can provide that same return, then what happens? Your share price goes down. So the alternative is buying back shares. So how does that work? Well, the company goes out into the market and buys back the shares of shareholders who are willing to sell. So shareholders who want to cash out. So they're benefiting because they're receiving cash when they cash out their shares. Okay, they're saying, okay, well, if you want to buy back my shares, here you go. They get money, so they get a return. They'll have a capital gain that they'll have to pay taxes on. But to the shareholders who kept their shares, since there's less shares out there, the profits of the company are being split up among fewer shares. So technically, they're getting a bigger piece of the profits that are left over. So their share price goes up. So they're getting basically the same value as if they had gotten paid a dividend without the tax burden. Now again, the person whose shares got bought back, they have a tax burden on the capital gain. But they have cash which they'll go and invest elsewhere. So they're going to go put that money to use elsewhere. And the shareholders who kept their shares are seeing the return in the higher share price, and they're getting to keep more of their capital because they're not facing that tax bill. Okay? Because a lot of people will be like, oh, shareholder buybacks is such a waste because nothing's happening. They should just use that money to do other things like pay a dividend. But again, if they pay the dividend, there's the tax issue, or to pay their employees more money. If it means it would increase the productivity of the company, if there's something to gain out of paying your employees more, then you do that. Okay, if that's because if the company just spends money to spend money, okay, it can go out of business and put everybody at risk. Okay, again, profits aren't if a company that's profitable doesn't mean they're profitable the next year. Doesn't mean they're going to be profitable at the same amount next year. So how those dollars get used requires sound stewardship. It does require some thought. Now again, larger and larger companies sometimes don't put as much thought into that. That's what happens when you have bigger institutions. The bigger they are, the harder they fall, kind of thing. And yes, one can say that a lot of these bigger corporations that maybe have worse and worse governance only exist because government has kind of protected them through all sorts of policies that prevent competition, etc. But that's not a fault of free enterprise. It's a fault of the opposite, of people limiting free enterprise. So the point is, shareholder buybacks do produce value. They put capital in the hands of people who are willing to sell their shares in the company, which they can use to invest elsewhere in the economy into new enterprises that'll provide new jobs to more people. And 2, they also allow the remaining shareholders to capture a greater portion of the value of additional profits of the company without being subject to the taxation that would erode the value in those profits. Now, if you prefer the company pay the dividends out as cash to their investors, then lower taxes. But it's rational And it's not necessarily, it doesn't have zero economic benefit. Shareholder buybacks have plenty of economic benefit because it's the same money. It's just, money doesn't just sit still. People think that, if you invest in stocks, the money's just not doing anything. If someone puts it in their bank account, the money's not doing anything. The money is moving around. The money never just sits still. Okay? And to the extent that companies make bad decisions or people make bad investments, a lot of that has to do more with the market signals in the economy. And we have to start asking more about all the different price fixing the government does in the economy and intervention in the economy that makes it harder for people to make accurate predictions regarding the economy to make the appropriate investments. But that's a different conversation for a different day. My name is Alex Merced from alexmerced.com. Have a great day and enjoy.